Need to do it, put some peroxide on it. You've been scratched by a cat. You don't know what's on his nails. You need to clean it.
We will get started in just a few minutes, everybody. Welcome
Might
to
have
this
bacteria.
session, Smart Money Fundamentals. Yep. Welcome, everybody. We'll get started in just 1 minute. It's 9 o'clock. We'll get started at 9:01 exactly. All right, y'all, let's rock. Let's go, let's go. Yep. Good evening, everybody. If we have not met, my name is Greg Whitmire, and I host this Friday night session, Smart Money Fundamentals, and welcome. I've been trading with IML now for a little more than a year, and this experience has exceeded my expectations. Man, just way beyond my expectations, far beyond just the financial. And I'm very, very happy to share a little bit into your experience tonight. I don't know how new each of you are. What I'm going to be talking about tonight, hopefully you can grab hold to it. It is useful if you're just getting started. It's a little bit, slightly intermediate to advanced, a little bit, but I share it anyways because I think no matter where you are in your journey, it's helpful to start planting the seeds for this way of thinking about trading. And it might be a little bit different from what you have been getting already, but nonetheless, I think, given that there's so many ways to approach the market, so many ways to develop trade ideas, and I certainly have found it useful to have several tools in my tool belt when it comes to being able to look at the market and develop trade ideas and be confident in doing so. So let's go ahead and get started. I'm going to share my screen and I always start with what I'm about to share with. Oh, here we go. This one I'm about to share with you now, and that is. We talk about mindset first. I always like to start off talking about mindset. Trading is, let me bring my phone up so I can kind of confirm what you all are seeing. I'm sorry, I should have brought this up before. But trading is 90% mental and only 10% technical. And what that means basically, and again, if you're just getting to learn how to trade, what that means is basically you are going to have to learn how to master yourself. And if you think you have patience, good, it will be put to the test. If you think you have faith, good, it will be put to the test. If you think you have discipline, good, it will be put to the test. So just be prepared that again, trading has a way of bringing out, because again, it's emotional. A lot of it. Well, let me turn my video off. Yeah, okay, trading triggers emotions. I'm not going to say trading is emotional. We want to learn how to, as my mentor says, trade like a robot, which may sound kind of cold, but it's almost necessary in order to, distance yourself from the feelings that are invoked from trading. This was, and I'll just talk about me for instance, this was the first time that I had ever been involved in any activity that involved me potentially being separated from my money, except for, when I'm making a willful transaction in the store, that kind of thing. I've never been big on gambling. I grew up in a place where gambling led to fights, fights led to shooting and stabbings. So I was never interested in doing none of that. So, but anyway, so therein lies, that opportunity now. All these years later, I learned this skill, and yes, it has an opportunity for me to make money. It also represents an opportunity for me to lose money, and the swings in between. You just don't get into trade and go from zero to money, or from zero to loss. There's usually some ups and downs, and those ups and downs represent those, that's when those emotions oftentimes are triggered and can make us do things based on emotional response and not from a technical response, because we just don't know enough yet. So I say all that to say, don't chase the money. Don't get faked out by, your account going up and down, watching the candles, unless, like I said, unless you're watching them with purpose, unless you already have defined those targets in the market and the direction in the market where your trade should be going, and then being able to, again, from a tactical standpoint, make adjustments based on what you see, and not just reacting based on emotion. So, to the picture. I always start with this, and I'm not going to spend too much time on, but I think it's really, really important, because we need to know, and I need to be reminded who runs the water, who runs the charts, and that's the hedge funds, the big banks, the large institutions. As a reminder, this is a $6.6 trillion a day market. There are billions and millions of dollars pumped in to this market every day. And again, when you open your $200 account with Who Goes Way or whoever you have, or $500 or $1,000, I'm not trying to belittle that, but I'm just trying to put in context, our percentage that we then risk in the market, our lot sizes for most of us, I dare to say for a large percentage of us, it has no impact on the market. Okay, it has zero impact on the market. So, because we all see situations where the market will shift, will turn, will throw wicks to the bullish or bearish wicks. Just do things that we don't understand, or pull us into a move only to turn around and go in the other direction. Why? It's because the market is being manipulated constantly. And when you understand that, and understand the rules, and understand who is manipulating the market, then you just learn to do what they do. Okay, not manipulate the market, but like what's in the picture here, the shark is represented by the let me pull it in front of me if I can. Am I still sharing? Yeah. So the shark is representing the controllers of the market. Again, this is your hedge fund. This is your big bank. This is your large institution. These are the people who are pumping billions of dollars into the market. All right. You get out in front of this guy, he's going to eat you. Okay. He's going to take your money. There's no if and buts about it. You need to know that the currency market was not set up for you to make money. It was set up for you to lose money. And if you don't get your education under you, you are putting yourself in a precarious situation where you're going to get out in front of this shark and get your money taken. That's just reality. So what do? You learn to do what the banks do. You learn to do what the institutions do. You're not going to be 100% right, but at the same time, if you're swimming alongside of the sharks, like we see here in this picture, the pilot fish, this is how they survive. Okay, they don't get out in front of this shark because they don't get eaten. But they turn when the shark turns left. They turn right when the shark turns right. The shark goes up, they go up, down, down. You get what I'm saying? But most importantly, when the shark eats, they eat. And that's what we got to do. That's how we have to shape our mind as if we are the billion-dollar banks, okay? And understand their moves or the likelihood of their moves, and then attack the market in that particular way. and that's what I am learning how to do. All right. So that said, I'm gonna go right into the charge. I'm just looking for somebody who has not muted their phone, and I'll just chalk it up as a mistake there. Okay, I think we got it. All right. So let me just share, and share again. All right, I'm gonna talk about a couple of pairs. Okay. I kind of recount just a couple of instances. Okay. All right. So, well, first of all, let me go through what I usually go through. Okay. Actually, I want to add this in. All right. I pulled this up. I want you guys to know in TradingView. Okay. I guess I want to talk about TradingView a little bit tonight. And, but here's the thing. As I've been around this for a minute, I see that it's, that it's I've had to kind of, broaden my information base. The way you learn how to trade is in that I Am Center Academy, by finding a mentor and then getting on their coattail and then following, doing what they do, listen to what they're saying, follow the resources that they tap into, and just basically do what they do. And so along those veins, I've learned that it's important to be abreast of, to the extent that I can. I don't understand all of it. Like I said, I am still learning this, but to be abreast of those geopolitical situations that impact the market, because those types of influences also can guide you, can help you with confidence, or help you with some level of what do you call it, confirmations about the market. What I wanted to point out, I have to move this out the way. What I wanted to point out is, okay, right now I'm looking at USD Chief. I'll tell you why I kind of landed there in a moment. But, oh, okay, in TradingView, there's a ton of information. Again, I'm not suggesting that there's trade ideas here too. I'm not suggesting that you take any of them, but again, sometimes just from trying to develop a picture, because that's what's going on here in the charts. You're trying to develop a story. You're trying to understand the story that's being told, okay? And just like a story that's being told, it helps sometimes when there's a little narrator that may come into the picture or come on and just give us a little bit more information about what's going on. I found this update in the bottom right-hand corner on this particular chart, and it talks about update US dollar net shorts soar to highest in 9-year CFTC routers. Okay, now not going to read the whole article, but basically what it kind of gets into is something that's really critical in terms of pairs that we might trade, and then getting to understand why they might be moving like they're moving, and then kind of using that information, just kind of tucking that information away in your tool belt as these next few weeks roll around. And basically what it's saying is that there's been a lot of shorts on US dollar pairs. In other words, that they've been selling US dollar pairs. Looking over here for who might got unmuted. All right, I think they caught yourself. Thank you very much. So, and what that means is that the value of the dollar has been on the decline. And I'm sure most of you all can figure out why. Coronavirus, all right? 2 words, coronavirus, or if that's 1 word, or COVID, whatever you call it, okay? And as a result of that, Euro pairs have been, there's been an increase in longs or buying of the Euro pairs. So this type of information, again, I use this type of information throughout next week, and this was 4 hours ago, so this is relatively recent information. And again, it's information I've been aware of, certainly all of us have kind of been aware of, but it's like, okay, well, how do I use this information to my advantage? And that's part of the broader education that I've gotten here over this year, and where I've just expanded my information set into areas like this, so I can hear this, I can see this, I can absorb this, and then I can use this information to, guess what, make me some pips coming into next week, or coming into, coming into next week, since the trading week is over for this week. So I just point that out, that the information is around us. Use it, start getting used to accessing it, start getting used to reading it. If it doesn't make sense to you in the beginning, that's certainly understandable. But over time, as you continue this journey, you'll see the value to being able to plug into that type of information. So let's do this. I'm gonna take this pair and just kind of roll in real quick. I want to just touch on the smart money fundamentals very, very quickly. We go over that every week, but there are some other more granular tools specific to TradingView that I just thought I would want to share. It might be helpful to you guys. So with and actually institutional trading is to me very, very straightforward, very simple, and is not the first trading idea that I've been exposed to. Okay. And I'm careful not to call it a strategy as much as to call it just it's more conceptual. And but you can introduce those concepts into the market and develop trade ideas based on that. But anyways, let's go up here to the weekly, and we always start on higher time frames, and that's pretty consistent with any trading style, where you start on higher time frames and then work your way down. Now, the significance of starting on higher time frames is that you have to know where you are in the market. You have to be able to establish which direction the market is going, what they refer to as the market bias or the market trend. And that's critical because you want to trade with the trend. 80% of your trades are going to be in the same direction as the trend. So you come to these higher time frames to get a sense as to, okay, well, which way is the market going? And of course, we all know, and I'm going to try to draw some lines here real quick, hopefully. Basically, we know the market is going to move. Let me draw this hopefully real quick. If you guys have not been through your basic academies or through the boot camp, the Manny Q boot camp, you have to get through this basic information. Again, you're going to see and hear this basic information again and again and again. It's not going to change. Again, you just should be developing, increasing your understanding of the information, but it's not going to change radically as you move through this. It's just going to get easier for you to see. And remember this too, if you get nothing else, remember that eventually the goal is to be able to trade with your eyes, okay? Sure, there's indicators and other tools that we can use to kind of help us help us with like confirmations and such. But keep in mind that the tools, I'm sorry, dang, I messed this up. Let me bring this up a little bit. All of the indicators, I guess is what I'm trying to say. The indicators and such are lagging. Okay, what that means is that they're kind of after the fact. So again, as much as they help, you have to realize that they are after the fact types of indicators, and they don't represent any future, any real promise of a future outcome, but they are helpful once you learn how to use them. Oh my goodness, did I mess that up or what? But here's what here we go. I just pulled that down a little bit. All right, so basically, what we're trying, I was just trying to quickly spend too much time on it, but we were just trying to do this here. And basically, where you have, represents a uptrend market. And actually, I'll just do this. I'll just do this because uptrend market is identified by where you have higher highs, higher lows, higher high, higher lows, and then higher high. So, and again, as you're looking at an uptrend market, you can easily identify because the market is moving, and guess what? What direction? It's going to be moving up, okay? And then the opposite will occur when you have a downtrend market. And as long as it took me to do that, but I think you guys will get it. It is just a market that's going to be moving in the opposite direction. all right, where you have lower lows and higher lows and then lower lows. And what you get out of that is basically what's referred to as a structure. And you use or start to identify and understand that structure for and anticipate to the best that you can next moves. Bring that down a little bit. Because the market's going to move in only this, oops, only this direction or the other. Just looking for who might still be. Here we go. All right. Okay, I think I got him. All right, so I gotta get quicker with this. I always spend way too much time on these little lines, but you get what I'm saying. Okay, so again, in the opposite direction, we have lower low, lower high, lower low, lower high, lower low. Okay, and that's then a downward market, and then you have a market, of course, that's just going to move sideways. That's consolidation, that's accumulation, and you're going to look for that. Now, what we're looking at here is pretty clear. All right, is this market has been moving sideways. Okay, this market is in accumulation, has just been moving sideways for. And here's another reason that I like to look at the larger time frame, because this will tell me a story as well. That this market is moving sideways, and it's been moving sideways in this range. These two yellow lines represent the range that the market has been trading in. So there has been some up and down, but for the most part, it has just been moving in this particular range. And actually, all told, it's a pretty big range. This is about 1,000 pips. Yeah, this is 1,268 pips. So that's the range that the market has been operating in since. And they go back all the way back to August 11th of 08. Okay, so this really has been moving in, like I said, a sideways direction. And here's what's significant about this. Here's what caught my eye about this particular pair this week. I'm gonna try to, I guess I can delete that. Okay, actually it's important, because what I saw this week with this particular pair was that price was trading low. And let's just look at this. And like I just mentioned, price has been trading, hasn't traded this low in the market since back here, or since here, which was like January of 2015. So before the market came down here, actually, I was probably trading up and around this area. I try to just bring my arrow back up in just to give you some idea. I was trading, again, I'm just going with the flow, okay? Just going with the direction of the market, and really saying, well, wow, the market is on a in this section of the market, anyways. This section, this zone that price has been trading in, and I broke this 1,000 pip zone down into smaller zones. I did a half, so it's like a quarters here, okay? What it's referred to as quarter theory. It's kind of broken down into these 4 segments. So if I'm looking at this last piece where market is price has been trading in this area, is just terribly bearish. Now, under normal circumstances, I wouldn't touch this. But because what I will be waiting for really is some point to take this back up to the upside. But you know what? And here's where it's going to get institutional on you guys. If you've been with me for the last few weeks, you know that we're looking for, in addition to trend, we're looking for, let's get this stuff out the way. I got to do a little writing. We're looking for areas where price is going to search and destroy, or we're looking for imbalance in the market that needs to be filled. And when you got all this selling going on, that sets up situations where there's going to be imbalance in the market. So, for instance, there has been, let me get that out the way. There has been only selling going on in the market on this pair from here all the way down here, okay? You see only red candles, okay, straight down. That means, again, there's only been selling pressure. There's a couple little stutter candles in here, but those are basically dojis. So those are indecision candles. But with everything else from here, let's give you exactly the length from here to here. That's 665 pips, 667 pips that the market has traveled in one direction. So what does that mean? It means that, you know, at some point the market is going to have to trade itself back up. The market is going to have to rebalance itself. It can't have a single side of only just selling pressure. It has to turn around and come back up and start filling in some of these areas. But here's the other thing. Just like there's imbalance here, guess what? When I go back to 2015, where there's also imbalance down here too. So you have so what factors into my equation is that, wow, okay, is price going to come all the way down and fill this area from what, 5 years ago? Now, my initial feeling is no, that it won't. But you never know. I don't know what price is going to do. Maybe it's just that particular time. And given that the pressures that are going on, and see, that's where, like I said, it's important to kind of understand geopolitical things. And now, I've looked at the U.S. dollar side of this equation, but I really haven't looked at the Swiss franc to see what the heck is going on with the Swiss franc. But it's right now it's stronger evidently than the U.S. dollar, so it keeps pushing down. Now again, it's with the way that the U.S. dollar value of the U.S. dollar is declining. I'm looking for, there we go. The way the value of the U.S. dollar has been declining, there is a likelihood that it could come down into this area. So so it's like, well, where do I get in? So I have to look for a point where market's going to pull back and possibly push down into this area. And if you look at it, let's look at something. This is where you really got to, you know, I mean, again, what fascinates me about this learning process and really being able to look at this story. Let me show you something else too while we're here. So like I said, price hadn't traded down into all the way down here since 2015. But look, just in the last, let me see, just in this week, how price has broken this low, which was from February of 2018, and it's actually broken this low. It's traded lower than the last May of 2015. Yeah, May of 2015. Okay, so you see that price is really setting new lows, or at least has traded down further than any price in the last 5 years. So so you start thinking, maybe price is going to trade down into this area. And again, like I said, you have an imbalance down here. Let me mark up the imbalance just so you know what I'm talking about again. This area between this area I just highlighted is an imbalance from 5 years ago. Let me and I got the green line because that's my target. That's my sell target. That's my sell target. I went less than halfway into this particular zone. And let me show you how far I am from it right now. Let's see, how far am I from it? Let's see, grab the measurement. I'm 107 pips from it, okay? And I've been trading this, I don't have my entry on this particular account. I mean, yeah, but let's just say I've been trading this already for a couple hundred pips, all right? Just in one direction. And again, institutional trading, the shark I showed you, the shark's not going to leave. The shark is not going to leave food in the water. This is money down here. So when I'm talking about, could you guys make sure you mute your phones? Thank you very much. Thank you very much. So when I'm talking about imbalance or these areas in the market that have not been traded into, okay, it's helpful. I was getting ready to say you have to, but again, I can't tell them about what they need to do. But once you start being able to identify, let me move the box. Might be easier to see. Once you start to be able to identify these, because now they're targets. Anytime you can identify an area in the market that has not been traded into, it becomes a target. Price is going to come here, okay? And again, in this instance, it might have taken 5 years. That's what it looks like. It might have taken 5 years. So I'm not gonna trade all this deep into it. But again, I'm gonna trade. I still got another 100 pips or so in for my final target, and I've been trading in that direction for 2 reasons. First reason is in this. Like I said, for the most part, in this 1,000 pip range, the market has been been trading sideways. But in this trading range, and let's go to a lower time frame. Like I said, I broke this out into 4 quadrants and 4 quadrants. So let's go down the time frame. Let's go to the 4 hour. Okay, and let's go to the 1 hour. All right, so we really see some structure. So this is the range I'm trading in. I went from 1,000 plus trading range. Now I'm trading in this range right here. I think it's about 200. Okay, about 386 pip trading range or trading zone. All right, and so this becomes now my single area of focus, and now I can start really starting to do some things. I know where I want to go. I know where my target is. Okay, and so from here, and what you see on the screen is basically what I couldn't have described it to you any cleaner. Let's get this bigger, because now I've got what I want for a re-entry if I want, and I probably will get back in this Sunday night since the market is frozen up. But I got my re-entry. Again, I'm trying to approach this like the banks, because like I said, I know that the shark is not going to leave money, not going to leave food in the bottom of the sea. This is food. This is money. This is money for one reason or another. I was looking for who to mute, but okay. Thank you guys for policing this up. And that's what I see this as. This is food. This is food in the sea. This is the sharks have to come get this, and it's just been sitting down here. It's like buried or abandoned treasure. But the institutions know it's here. It's no secret. They know it's here. But for whatever geopolitical, economic reasons, it's just been left down here. And for some reason, it looks like now it's the time to recapture that. The market may recapture that. So, okay. So like I said, I go back down to my smaller time frames, and I'm looking for opportunities. Okay. I got my target. Market's trending in the direction that I'm going to continue to trade in the direction the market is going. And so what do I have here now on the 1 hour time frame? Okay, I have what might look like a setup. So I just grab my fibs. If you don't know how to use fibs, again, that's a good opportunity for you to go back and find the tutorial on Fibonacci, and it can take you a very long way. So basically, what we use the fibs as a retracement. So what? Oh, you know what? I'm gonna take the fibs off. I'm gonna take the fibs off, because really, what I'm looking for here is, let me show you what I'm looking for. Show you exactly what I'm looking for. A point of interest. Okay, I got a point of interest. It's called POI, or institutional candle. I'm looking for the last candle, the last buy candle before this last leg of the market sold down. So where do I have that? It's right here next to this engulfing candle. I want the last candle before the last buy candle before the market sold down on this leg, and it's right here. So what is price likely to do, or why does that become a point of interest for me? Because I need price to trade back to this candle. And you can look at it like back to structure. And actually, this is a teacup formation. But all that aside, or actually, those work as additional confirmations for me for what I'm seeing here. But I just wait till price comes back to this area, to this candle, okay? And then I'm looking for a reaction. I'm looking for this basically now to represent my area of support, this candle. And it just happens to be at structure, okay? So that lines up. And then when price comes back to this area, which it did, this wick, all this lines up. All this lines up. Where do we get the price reaction? Price came up on that wick and it lined up with that wick. And what happened? That's your resistance. Now price is going to do what? Well, the reaction we saw is that price is now going to start pushing itself back down. So what we got was again, price pushed itself down to this area. And now again, price does what it does, just go back where it came from. It came back up to where it didn't break this particular, it respected this area, okay? And now we see it pushing back down in the direction that we're expected to get. Now, another confirmation again here is that we have one of the key confirmations in any trade analysis. We have in this instance, a bearish engulfing candle, okay? So when you got your bearish engulfing candle, there's again a good likelihood that price is going to continue to travel in this direction. Now, what I'm gonna look for in terms of areas of, I'll call it resistance, again, start with this, because I do have this sell candle here, which could represent some resistance. I'll see if price stalls in this area, but let's just say, because you take this a chunk at a time. You take this a chunk at a time. So if I'm gonna look for my reaction from here, if I got in there and just trade to that candle, that's 33 pips there. Okay, can watch price in there. But ultimately, where I think price will ultimately come back to, will trade back to this point of interest. That's where I want price to trade back to this point of interest. So, and that's basically now you're looking at almost about a, let's see what kind of retracement. Looking at about shucks, that's 100%. Yeah, that's 100% retrace. 100% retracement. Oh, we're trading to the downside. So if I'm gonna stay with my original analysis, I'm gonna stay with that. Price will come down here, trade into this area, and then I would have to again watch price to see if it traded again past this area. We've already seen price's willingness to trade to a new low. I already showed you guys where price has already traded into an area past a 2015 low. So if I stay with that analysis, and again, especially since price didn't break, it respected this area and it's continued to trade back down. If it gets back down into this area and pushes past 100% retracement, then boom, we're going to continue, more than likely, continue to trade to the downside in that direction of, and still continue to capture those 100 or so pips that I need in order to get to my target. But you remain flexible. You remain flexible, and I've been in this long enough, I can't lose at this point. But you get into the trades, and again, you gotta, see your way out and have short stops and all that kind of stuff. So, all right. So basically, this comes Sunday. I'll probably watch this Sunday, see what's happening. I might put in another entry, but at this point, I would have to catch it. Let's go down the time frame, because I'm not going to put in, a big stop loss here, and I would be getting in. I might even need to let this go, because that's not bad at this point. Yeah, we're looking at about a 16 pip stop loss. If I did that, maybe make it 20. Give myself a little bit of room. So do a 20 pip stop loss, and if I trade it down to the 100%, yeah, so do a 20 pip stop loss. So it's like about a 2 to 3 plus actually. I'm sorry. Yeah, a 1 to 3, 20 to 70. So a 1 to 3 risk to reward ratio. I can live with that. With a 20 pip stop loss, might even be able to find a little tighter stop loss. But again, that's the essence of how we would go about identifying a particular trade idea on this particular pair. And then, of course, the other thing is, and this is where you have to prepare yourself. Everything I just said, the other part of that is price could trade down here, could trade to this, excuse me, could trade down to this point of interest. Okay, that's the last sell to buy. Up here we had a buy to sell candle. That's the last sell before it went into a buy. Okay, so it comes back to this area as a retest. So if it doesn't punch through, guess what it's going to do? Come back and retest this area. Then there's a likelihood that it takes off in the next leg to the upside. And so there, it's always a 50-50, it's always a 50-50. That's why you have to be patient in this market. You have to be patient in this market. And if like I said, I've already positioned myself in this trade. I'm I'm pretty well situated in this trade. So if I have to just if it turns out it doesn't continue to push to the downside, trust me, I'm in good profit here. Right now, since this move back to the upside, that does represent a slight retracement. Yeah, about shucks, that's more. That's like 85 pip retracement. But again, I've been in this a while. Trust me. So it's I'm not gonna say insignificant, but still, if I got out right now, trust me, it's a nice little profit. But anyways. I'm prepared for that. If I don't get what I want, I just do something else. Don't marry none of these trade ideas. You ain't got to marry none of these trade ideas. You stay flexible. You keep your eyes on the market. You stay flexible, ready to adjust, ready to get out, ready to do what you need to do in order to protect your bag. Okay. So I'm gonna jump from that into just a couple of tools. And I guess I've demonstrated a few of them, but it's so important to know where you are in the market. It's so important. If you are taking trade ideas from the Telegram group, it's so important to learn, practice. Even if, okay, here's what I would suggest you do, because I know when you're taking trades for ideas, especially if they're market execution, it's imperative that you get into those trades pretty much right away, because price is not going to wait. But when you have those situations like what I saw here, this is a trade idea. I'm sorry, I don't know the young man's name to put the trade idea out, but I like what he did here. I really like what he saw. I really like what he did, and I really like the fact that he was providing updates on the particular trade idea that he put out. That's just golden. Everybody doesn't do that. Everybody doesn't get a chance to do that, but it helps people who are taking these trade ideas with their confidence, because again, when we're new, I don't know any other way to say it, but we take these trade ideas blindly because we just don't know any better. But you want to put yourself in a situation as soon as possible to know what you're getting into. I'm just use this as an example because it's the first one. And I think he said that he was staying in it over the weekend. It looks like it's going to do what he wants to get out of this. So if you're in it, I think that it will be a positive trade. But here's all I'm suggesting that you do. When you get a buy limit or sell limit, open up TradingView. All right, everybody, TradingView is a free platform. Just go to tradingview.com, open it up, sign in. They have free accounts, they have paid accounts. Start where pick what tool you want, but just learn how to use it. And I'm just going to introduce, got a few minutes, I'm just going to introduce and talk about just a couple, two tools. And one of them we're going to just repeat. So you definitely need to know your trend line tools. Over here on the left-hand side is a list of tools, okay? And it's the same, and see, TradingView and Harmonic Scanner are the exact same. Harmonic Scanner is built on TradingView, okay? It just has the intelligence built into where it identifies the setup, et cetera, et cetera. So this is, but that's the platform that it's built on. TradingView is the platform that Harmonic Scanner is built on. So if you know how to do it here, you can also apply what I'm showing you tonight. You can apply it on the Harmonic Scanner if that's what, if you're using that. So We got these tools over here on the left-hand side. The second one from the top, the first one is this little crosshair that I very rarely, almost never use that. The one I want to talk about here is Trend Line Tools. It has a little arrow here to the right. You just click on it and it lists all these different types of lines and such that you can use. Here's what I'm going to say, learn how to use, to keep it real simple tonight, the horizontal line, okay? And how you get it. Once the menu selection expands, you just click on it. Click on the horizontal line and then click on the chart and it drops on the chart. That purple line is, I just dropped on the chart, all right? And you can do it as many times as you want to. I say do it 3 times and I'm gonna show you why in a second. Let's start from scratch. Get that out the way, get that out the way, get that out the way. All right, so I did it once, I'm gonna go back, I'm gonna do it again, I'm gonna go back, I'm gonna do it again, all right? So I got my information, I copied my information over from Telegram onto my chart. And I did that by just using the text feature. Again, that's the T for text. You just click on it and it'll give you a box and you can type. Boom, 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 boom. Okay? Simple. All right, so that's how I got it. And again, I just took the information from Telegram and then just typed it in here using the text field. Okay? So I know it's a buy limit. Let's get rid of that. And so I'm gonna use these lines to as visual cues for the information I have here, because I need to know, I need to be able to see to know where I'm at in the market. All right. So EURGBP, right? Okay. So I'm gonna change the color. So when you click on any of the lines, all of them work the exact same way. They just wash, rinse, repeat, wash, rinse, repeat. I click on the line. It gives me this box you see here where I can use the settings. I can change the color where the little crayon is to change the color. I'm gonna use green for money. All right, my take profit is money. I'm gonna go to the next line. I'm gonna use red for stop loss. Red is my stop, okay? And I'm gonna go to the other line and I'm gonna use blue for my entry. All this is subjective. There's no magic to this. These are just the colors that work good with my brain. You use the colors that work good with your brain, okay? But here's why I use them. Now, I need what the information I've been presented, I want to represent on the charts with, these lines. So the blue line, like I said, is my entry price. So I click on the line again, and I use this little gear right here in the middle. It's called settings. And under the title coordinates, I just type in what it says up there. The entry is 0.90032. I just type that in and hit OK. The line moved to that price. Okay, so now I know where my entry is in relation to this chart. I'm gonna do the same thing with my stop loss. That's just the next piece of information I have here. I click on it, I go to my settings, this little gear right here, and then I'm gonna type in my stop loss, which is 0.89502, and then I hit enter. That then positions that line on and that price on the chart. I'm gonna do the same thing with my green line, my money line, my take profit line. Hit settings, and I'm just gonna type in what was already provided for me. I had to think of none of this; it's just given to me. 0.90282. All right, so now I have all the elements. Let's come out the week, go down to the hour. Now I have all the elements that I need on my chart now to know where I get in the market. Grab my arrow, where I get in the market, which is right here on the blue, where I want to go. And again, this is what we say. Let me go get this. I was looking for I lost the text, but let me try to get it. Hold on one second. All right, let's move that over here and up here. Okay. So we know this is a buy limit. And the instructions are, or how this is supposed to play out, is that I'm supposed to get in the market here, and the desired direction, I want to go here. And my stop, did I put my stop? Where am I stop? Oh, okay. And my stop is down here. Okay. I don't know about you, but that helps me. That helps me to know what the heck is supposed to go on, and where am I in the market, and what adjustments might I need to make in order to, either to make this a successful trade, or to help me manage this trade in a manner that I know what's going on. Am I getting ready to get stopped out? Am I going to profit? Has price stalled? Should I take another position? Has some other opportunity opened up for me? What the heck is going on? Okay. Now, like I said, you have the creator of this particular trade idea, who was professional enough to be able to provide his video updates. But trust me, you don't get that from everybody. So if the onus is on you, once you get into these trades, to know where you're at and to know how to manage this information. So let's just take and now also, I don't know if you guys heard, I listened to his updates. I didn't put in his original stop loss. He moved his original stop loss because I think he saw that this was a head and shoulders, or reverse head and shoulders. I'm not the expert in head and shoulder patterns and what it's supposed to do and such, but I do know a sell limit and I'm sorry, buy limit. And so I know the price was to come down to this area, and he was expecting it to reverse up in the, take a bullish direction up from the entry. Okay. So, but what happened was it triggered the entry, and then continued. Trying to make it a little bigger. I'm sorry. It triggered the entry, and then let's make this another color. Let me see that. It triggered the entry here, or somewhere around here, and then of course it took it took some retracement. So I don't know if it was how close that would have been to, or continued to the downside, continued in a bearish direction, and then start pulling up, and then came back down, blah 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 blah. So he moved his stop loss. So my question would be, well, why did he move his stop loss? Okay, well, he kind of explained it on the video why he moved his stop loss, but see, what I know from, again, just being a student of this, is he moved it, and I think, I'm not a big fan of moving your stop losses, but yeah, like I said earlier, you got to stay flexible. Let's go up a bit. There we go, so we can see this whole thing. So he moved his stop. This is a big stop. This is a big stop. It's like a 50 pip stop. I don't think he started out with it being that big, but he moved it, wanted to try to salvage the deal, and look where he bought his stop. He bought his stop down here. Why? Because that's structure. He bought his stop down here because that's structure. And what did we talk about before? What did we talk about before? Let's say, what did we just talk about a minute ago? What's right here? Let me highlight it. What's right here? Whoops. This is a point of interest. That little candle right there is a point of interest. That is the last sell to buy candle on this leg of the market. Okay, and what's price likely to do? We just talked about it. What's price likely to do? And see, we didn't even talk about lower lows and higher highs, but I'm seeing a whole bunch of stuff right here. You got this area of liquidity down here. Okay, price is already prices kind of already played down through this area, picking up liquidity, but it's got more It's got more imbalance in the market that it has to account for. There's been no trading this area all the way down here. It's nothing. It's nothing. The market has to rebalance itself. So I think he's 100% correct in that price is going to come back down here to this point of interest. Price is going to trade right back down here. Now, either it's going to blow through it, clearly, it could. Price could just blow through this little area of interest. Let me try to get my candle The way so you guys can see it. It can blow right through this and keep going to the downside, or more than likely, it will respect this area because you have a lot of rejection here in this area. So it'll probably reject here, and then those who are in that trade will probably get what they want, which is then a move to the upside. Let's get that out the way. And then price move to the upside. So again, this all started out, this is what I started out saying, when as soon as you're able to identify, and like I said, I'm running out of time. I didn't talk about the higher highs and lower lows, but that's significant as well. I'm looking for just two things. I'm looking for higher highs, lower lows, which I'll say that's one thing. And then I'm looking for imbalance in the market. And those are going to be the areas in the market where price is magnetized to. Price has to rebalance itself at some point. We just don't know when, but it has to rebalance itself. And when you see these large aggressive moves in one direction, okay, in one direction, and it happened over here too, we saw an aggressive move to the upside in what? One direction, okay? What happened? Price came down, it filled some of that area, and it has to fill the rest of it. It has to. It has to. I'm gonna be looking at this on Sunday night too. And again, here's what I'm gonna do. Here's what I'm gonna do Sunday night. I'm gonna put my buy limit in, but I'm gonna put my buy limit, screw that. I'm gonna put my buy limit here. I'm gonna put my buy limit right here. Actually, where his stop loss is at 89502. I'll put a buy limit. And guess what? Let me see. Let me come down. Let me come down. Because now I'm looking for what because this is going to be a very, very tight, stop loss on this. I'm looking at probably no more than about a 5 pip stop loss. Okay, here we go. Yep. Yep. Man, yeah, so I might make this about a 5 pip stop loss. I hope you can see where I'm pointing. Yeah. So yeah, so we get in here. I'm gonna get in here. I'll tell you what I'm gonna do. I'm gonna get in when price comes right back here. Okay. And my stop loss, I'm just going right here. I'm not doing no big 20, 30, 50, 100 pip, all that. No. I'm gonna do about shucks. I guess I'll probably go 10 pips just to say I'm gonna go 10. I'll do a 10 pip stop loss, and that's it. Price pushed beyond that 10 pips. That means it didn't respect this area of rejection, which I'll go up a few time frames just to see how strong it is. But that means it's not respecting this area, and it's not going. I'm not going to get out of it what I want. I have to find another entry, and but. Let's just watch that for 1 second, then I'm gonna wrap it up. So look, so I'm looking at a 10 pip stop. I'm gonna go back where we can kind of see the structure. So like I said, I'm looking at a 10 pip stop. Keep that in mind. I'm looking at a 10 pip stop, and where am I gonna go with it? I'm gonna go to this candle. This is my other area of interest. 50% of what? I don't want that. I don't want that. 50%, I'm gonna use a red. Hey, baby. That's my other point of interest. Because like I said, these are institutional candles. I'm gonna go right back to where price came from. And you think about it, got another confirmation because that's your bearish followed by, bullish candle followed by engulfing bearish, and then it pushed down. That's the starting formation for a teacup, which is then it's likely again, likely that price will return to that area. So it's going to do one of these kind of things, come right back up to that area. So boom. So let's look at it real quick. What I would do, I'm getting in. I'm getting in here and take it up. So that's an 80 pip move. So that's an 80 pip move with 10 pip. So that's like a 1 to 8, something like that. Is that right? About like a 1 to 8 risk to reward. And when you're trading like that, when you're trading with that level of risk to reward, you know, I could be a bad trader and make a lot of money because, you know, all I got to do is be right 30% of the time. Like, you know, forget 80, 90% accuracy. I just be, because again, I'm going to catch up. I'm going to catch up. If I lose 10, get 8. Or if I lose 10, that means if I lose 10, if my stop loss is 10 pips and I miss that 8 times, well, let's say I missed that 7 times, and then on the 8th trade, I get it, and for 80 pip target. I'm ahead. Okay? Risk to reward. Not to say that I want to do that, but I'm just saying that in terms of, you know, just helping you understand the risk to reward is everything in trading. Understand that and these targets. And so anyway, practice this. Practice, not all this other kind of little stuff that I just got into later, but practice putting these lines in the chart. Remember, all I did was come over here. I found the horizontal line. I clicked it once, did it again, clicked it twice, did it again, clicked it 3 times. And I just changed the colors on each. I changed one to red, one to green, and then one to blue. And then I just lined up, just used the information I already had. Okay, I didn't have to come up with the trade idea. The trade idea was given to me, and I just clicked and then use the settings, use the coordinates to put in the price that I had, and then that was given to me, and then at least I understand where I'm at in the market. And I'm building my understanding about what the heck I'm doing in these markets, and building my understanding, building my confidence, and that's going to be everything as you continue this journey. I hope I didn't, you know, terribly confuse folks. That's certainly not my intention. Hopefully somebody got some value out of all this rambling I'm doing. So are there any questions before I sign off? Like a minute over, but I'll certainly take some questions if you have any. And I'm gonna pull up my telephone number and put that up on the screen in the event if anybody wants to contact me, have any questions about anything that I've shared.
What is your TP that you put for Sunday?
Oh, well, in this instance right here at my take prop, if I get in, and actually I think this moved for some reason, because actually I'll be getting it down here on this candle. Yeah, so I'm getting it down here on this candle. And so that my entry, I'm gonna do a buy limit with an entry at 89490. And my take profit target is going to be here at 0.90543. So that's even a bigger move.
And your SL, your stop loss?
10 pips from entry.
Okay.
That's about a 104 pip move.
Thank you.
And yeah, you're welcome. So I go 10 pips from and you think, see, there's nothing else down here. There's no support. There's no, if I look left, there's no reason for me to stay. If I don't get what I want almost instantly, that means price has an opportunity to just run away. And and let me just put one more little arrow here. Yeah, because once price leaves this area, you see, it's nothing. It's just gonna run. It's gonna run all. It's you know, it's nothing. No significant structure till we get down here for price to have any reason to think about stopping. So again, it's not going to take me 50 pips or 20 pips or 30 pips to know that this trade is not going to go my way. 10 pips out. Oh, okay. I said I was going to share. Let me stop sharing that. And I'm going to share this here. And I'm humbled that you guys will get on and listen to me go on and on about this. I love trading. I love learning this stuff. I love having the opportunity to communicate it to others, and hopefully I get better with clarity and conciseness. But here's my information. That's my name, of course, and telephone. That's my Instagram at Gregory Whitmire. My website is savvytrader1.com. And I'm on YouTube at Savvy Trader 1. So if you subscribe, like, whatever you want to do. Of course, you know, Facebook, all that kind of good stuff. So feel free to reach out to me, text me. You know, I'm more than happy to talk to anybody about anything, you know, trade related stuff. But again, good night, everybody. You guys have a wonderful weekend. Practice, practice, practice. Open these charts up and practice this stuff. Lay these lines in the chart. Find another chart. Lay some more. Just, you know, just get in the habit of laying. Make up numbers. It don't matter. Just get in the habit of being it. Or go back. Go back into, if you are taking trades from the signals group, go back and find 2 or 3. I challenge you. Go back and find 5. Go back and find 5 recent trades, and then put them in the charts using what I just showed you tonight in order to just, again, develop that understanding of where you are in the market. So with that, hopefully challenge accepted. You guys will get stronger with that, and come back and, you know, touch base with me. Let me know if that's useful, if you found that useful at all. But anyways, let me shut up because I'll go on and on. Good night, everybody. You guys have a great weekend. And thanks for signing on. Good night.
Good night.